with your knowledge. We had a chance to everybody rap very quick about what the experience has meant to them. And so the biggest thing is that this has been a community, and just want to thank you for stepping up. So
Appreciate y'all. I appreciate y'all. I see we got 85 people on, so it's deep tonight. Damn.
yeah, everybody ready, man. So
Word. So are you
um
gonna be my moderator? I know I was
yeah, so I got the list of questions, topics, made you the co-host so you can feel free to share your screen when you need to. I know we got until we said 9, right?
yes, I just got
Okay,
off work up at 9, but I
cool.
got to, basically get ready for my summit presentation tomorrow. So
Word. Congratulations.
and get that nice and tight. But yeah, we
Okay,
rock till 9. So we can try and be as efficient as possible.
perfect. So then let's get right to it. I have we have Zay here. If you're not following him on YouTube, please do yourself a favor. Every Sunday he's dropping new videos, especially around technical analysis, giving market overviews on the First Gen Wealth Building channel, right? That's correct.
Yep.
He has courses on Gumroad. He has 101 consultations. So if after this session you need more reinforcement, please book you a 101 consult and just, elevate your game. So without further ado, we have Zay here.
Yeah, I'm
We
trying to
give
get the
him.
links on my YouTube channel for y'all real quick.
Mm-hmm.
I'm gonna put that in the thing, and then we just gonna get right into it. All right, here we go. That. All right, so what is gonna be the first topic? God, dog it. What's the first topic we getting into tonight?
All right. So the first topic we are going to talk about is, when do you use the day, week, and month time frame?
Okay.
So when you're looking at charts,
Right.
when do you use the day? When do you use the week? And when do you use the month? And what story does
So,
that tell?
okay. All right. So let's break that down a little bit. All right. So I finally got the link to the channel, so we good. All right. So let's kind of dive into that and break that down. So when should you use the month, weekly, daily chart? I use it to always break down my chart. So I'm gonna just go ahead and get the chart sharing, the screen sharing popping. Because for me, the most effective way I'm able to teach stuff is actually just share it and show as I do it. Right. So everybody should be able to see my screen now. Uh,
Mm-hmm.
so let's just start with a bear chart uh, and talk about how do I know what time frame to use. So number one, you need to know your trading style. That ultimately is going to be part of what dictates what chart you need to use, right? If you're a day trader, you need to be using like an hour chart, 30-minute chart, something that where the time frames of what you see are tighter, so you in and out, because your time frame of that trade is not that long, so you don't need a lot of time to basically find that trend. If you're looking at, say, a trade like what we're doing, which is long-term investing or elite, you really want to be looking at month. I would say weekly is number one for me. I always look at weekly. That's where I start. Now, what I'll do is, and I did this on my on one of my setup Sundays. The reason I like to start with monthly is because it just gives me a perspective of, what it's been doing, over the long run, right? What is the real trend? What are institutional levels, right? And then from there, I'll break it down to a weekly. And once I do that, I'm just really looking for what are those main, like I call pivot areas. What are those peaks and valleys? And once I do that, that already kind of sets up my levels for if I want to drill down to a daily. And then from a daily, right, I'll just have more lines. And then as you can see, once I start to get to like a smaller time frame of 4 hours, if I'm a day trader, I'll be able to keep zooming in, and eventually my levels will just keep sticking, and then I could just keep like defining it more and more and more. So really, you just need to understand what type of trader you are, what all right, so for the trade itself, what duration is that trade? If it's, say a swing trade and you're doing a 3 to 6 month contract, then you still can kind of use weekly. You can use daily for sure, because that's going to give you the best perspective. Um, and so I would just say the time frame of your trade really dictates the time frame of the charts you should be using and looking at.
Okay. So if you're doing, let's say you're doing so for leaps you would use a weekly, monthly, but for like, let's say you were in a swing trade, like a 6 month, you would use a day.
Or weekly though. I mean,
Okay.
like, you know what I mean? Like if I'm looking at let's just use the SPY um as an example. As y'all can see, I was going in earlier, testing out some theories and stuff. Um, but so if I was planning out to say let's say a 6 week trade, um, which would put us, or no, I'm sorry, 6 month trade would put us right now. We're in April, May, June, July. Basically, let's just say end of the summer, September. Um, so on my chart, right, I can see September ends right here. So this is about how much time I have, and then I can kind of look to see, I'm using this to test to see, okay, what are my entries based on weekly movement, right? So now that I have some movement, and this is actually perfect. So let's say we do want to plan the trade going into September. Well, right now I could tell you the best entry price as we begin to move forward is down here at 402, 404.
Mm-hmm.
I don't want to pay anything up here. I want to see if I can get in back down here. So number one, that already tells me for a weekly trade perspective, I need to at least wait until it gets down here. Now, when did that happen? I don't know, but I need to be patient, right? Or I have to continue to let the trend play itself out until I can find out if this is going to be a good level. Because say we run up some more, right? Then okay, we fall back down. Then I want to see how does the price react when we get here. If it breaks down more, then again, this area was right. But say we start to bounce, then hell, I need to get in because that tells me it might be going even higher.
Mm-hmm. Okay.
So, if I'm planning out a 6 month trade, or I mean, somebody can give me a ticker if you want.
Tesla.
All right. Tesla. So with Tesla, right? So if I'm planning out a 6 month trade on Tesla, that would put me at about, like I said, September, right? So if I look at that, and now that I have some price movement, right? So what I can see is that from basically February down to here, or I could go here, but essentially I'm gonna just hit where it closed. March 1st, that was 21 days. So that's about 3 weeks. So in 3 weeks, Tesla had a decline of 31%. Right. Now, typically with TA, when you get a drop like that, it'll take about the same amount of time for you to get that same percentage back. Typically.
Mm-hmm.
All right. Now, if I start here, and I do 21 days, you can see that Tesla hasn't necessarily gotten it all back. Right. It basically went through a double bottom. But what I can assume is that since it did a double bottom, so we could take 42 days, and that gives me 30%. Now, what I could do to plan my 6 month trade of September is say, okay, so it fell 42 or 30% in 42 days. From here, I can look for 42 days, drag this out 42 days, and do about 30%. And that put Tesla's let me just delete that so you can see. But that put Tesla back at 800 by May 3rd.
Wow. So, this app, this trading view app, like, okay, it give you the days.
Yeah, that's just the little tools. And I mean, most platforms, like I think Thinkorswim has a tool like that. I know there's other, things that have that, but yeah, it's, for me, I'm all, what I've learned is that now the percentages are definitely the best way to go, because I could just, I know we dipped 30%. If it gets that 30% back, that puts it at, like we said, 800.
Okay.
So if I'm planning the trade, because here's the thing, you got to be cognizant that June quad witching is coming.
Mm.
Is so if I'm gonna do a 6-month trade, that means I need to be out, June, July, depending on if you want to even hold through. Really, I would just say end of May and get out, early June, end of May. So if you get a September trade, basically you say, all right, I'm gonna do a September 800. If it gets to 800 by May, what I'm saying, you can either get out or you can keep holding, and like I said, run it up into about the end of May, and then you would want to get out because ultimately, it's going to be a pullback and you could just take your profit.
If you were to activate price channels on this,
so I don't use, the price channel I use is the Bollinger Bands.
okay.
So me, the bands kind of agree with my thesis because the top of the band is right at that 892. So I'm right there.
Okay.
You know what I mean?
Good. And when you're looking at candlesticks,
Yeah.
how do you read them?
Got it. All right. So great question. So reading candlesticks is actually fairly simple, right? So this is the beauty of starting using higher time frames, because the higher time frame, the better the trend you can confirm, right? So as we look at Tesla's chart, you had a pretty full candle here, which ultimately signaled there was a lot of buying that happened when this was pretty, it was pretty big buying. But then what happened was we traded sideways and it broke down. So this right here can just tell you how full the body is, meaning who has the most control. So the fuller the body, the more powerful the candle, right? If it's like thin like this, that's weak. That's what that signals to me. These are like weak candles. Usually that signals low volume. That's another thing. So you want to pay attention to like how thick the body of the candle is. That usually signifies low volume sometimes. What else? How else do I read the candles? Okay, here's another way how I always like to focus on open and close. So a lot of people will pay attention to the wicks, and you can see I do have some levels set at where the wicks are. But ultimately, when you look at where we open or close, those points are typically going to be fairly close. Like if you look right here, this candle, we closed at 609.99, right? If I look at this one, we closed at no, I'm sorry. Yeah, we closed right at 597. So that was kind of close, within $10. You got to give or take with Tesla. It's such a wide trading range. But the point is, then you got it opened here at 655. It opened on this day at 615. So with Tesla, you could have just used that data to say, all right, whenever it's between say 600 and 610, like that's a good price. Like as you can see, multiple touches here. Every time it's gotten there, it's pretty much went up. Now, if you got in here, yeah, it would have went down on you a little bit, but ultimately it still went back up. And that's also how you can find another way how I read candlesticks or how I use them is you also can find your support and resistances based on these candlesticks. So with that, you do want to kind of pay attention to the wicks and the numbers that you get multiple touches at and where they get rejection. So you can see if we look at Tesla and zoom in on these candles a little bit closer, this one here, it had a high of 718.72 and then it got rejected. This candle here had a high of 721.11 and got rejected. This candle had a high of 717.85, got rejected. This one went up to 713, got rejected, and then kind of there you see it just started drifting because it didn't get any higher. But ultimately, this kind of tells you that, all right, between 713 and 720, like Tesla has a hard time getting through that price. And if it does get through that price, look what happened the last time it got through that price. It went on a big run. So what this tells us is that ultimately, if Tesla gets above 720, y'all, don't be surprised if it runs back up to, like we said, 850. You know, if it because it's definitely going to test these highs, because that's what happened last time. And so, like, that's kind of how, you know, I use candlesticks as far as just reading them. I mean, I will say get familiar with some of the patterns, like understand what a bullish engulfing is, what a hammer is. But here's the thing. I ultimately use a cheat code when it comes to reading candlesticks, and that's using the line chart. Like I showed that in my video. At the end of the day, when I use this shows me all my reversals. So all I have to do is kind of mark off these levels, change it back to candles, and then I can look at my open, close, fine tune my levels as I see, as I see fit, work it down to say a daily chart that really going to tell me like, all right, what's really popping, you know what I'm saying, from a daily perspective. And I really can see, okay, what other levels are going to serve as those mini levels of resistance and support in between those higher levels that I see the institutions are trading, which is why you should never get caught in the trading kind of in the middle of any zone. Because when you with Tesla, once these levels got set, you should have known like, all right, 608, I need to at least wait for that 608, 615 before I do anything once it hit about 700. Like once it
So
cracks.
when you say zone, are you referring to like the sideways trading? So don't get caught in like that unsure space.
Right. So if you set off a high of say like, let's just say because it got stuck between these levels recently, right? 719 and 608. For the past couple of weeks, we've been stuck in that area. No, once you notice that, the only time you should have been even considering buying Tesla, you should have been like, oh, I'm gonna have to wait till 608 or below or something like that. Because say if you like, all right, it's at 643, I think it's gonna go up to the 670. Well, what if it doesn't? It came back down. Now you lost. So it's like just be patient and wait for your targets to hit. When they get to 720, you need to be like, I need to see that thing. I need to wait to see if it really holds 720, because every time it did, it went right back down.
Mm-hmm. Okay. When you are looking at historical chart data, what are you looking for? Like, so if you wanted to look at the historical nature, like compare like what, actually Shay, unmute yourself and you can ask this question as specific as you wanted it.
Okay, so my question was, people, Mark and you and other people are like, okay, you got to look at the historical nature of said stock. So say we're looking at Apple. Let's go with Apple. Say we're looking at Apple and you're going back to look at the historical data from the chart. What are you looking for and what are you using it to do to inform you? What is it informing you to do?
I'm just looking for trends. So I'm looking for, all right. So first thing, if I'm looking at Apple's chart, boom, I go to bar chart, year-to-date performance 98%, over the 2 years 166%. You can see, all right, it's a constant grower. But if I'm on a chart and I go to Apple, oh crap. I mean, and if I'm looking over the long run, like a weekly, and so this right here is say the 217, right? So as I look at this history, all I'm doing, okay, so I see it. There was a point in time right here through this, from October to January 19th. For me, when I'm looking at historical, I just want to get an understanding of, okay, what was that percentage drop like? All right, so they dropped 40% over 91 days. Cool. All right, that lets me know that if they were to go into a bear market or something, I could expect at least a 40% drop over 91 days. So let me just go do some more back testing. All right, so we had another big drop, right? That was from here. This was basically the Corona. If I measure that, it was 34 days, 30%. So, this one was a much, it was steeper, faster, but roughly, this one's a little bit longer and 10% more. But once you add in the fundamental story of you had to know what happened in 2018, that was when the yield curve inverted, like a lot of stuff happened. So that elongated this drop here. This was the Corona drop. So you need to also add that data into perspective to understand, right? Then, all right, so cool. We got another drop, another massive drop. And really, for real, I could put it around here because it ran up. So let me just start here because that was what the price is. So over 28 days, it went down 24%. So now what I'm doing is I'm just getting an understanding of what does the typical drawdown on Apple look like. So if I go over here, I bet you this drawdown on this most recent drawdown on Apple, I guarantee you it falls between 28 and 30% before I even do it. So if I start here and kind of go to where the bottom hit, this one, I think, let me make sure I'm clicking on the right joint. Let me delete this for a second. This one. All right. Yeah. So this was over 42 days and right at about 20%. So it falls in line with the typical drawdowns. Now, here's the cool thing, right? After all these drawdowns, what has happened? That's the next thing I'm looking at. All right. Oh, my bad. Over the next 112 days, it went up 40%. And really, if I wanted to count this, I could count this run because this just was a little small pullback, but I ain't going to do that. After this pullback, Apple went on a glorious run for 147 days, 116%. And then, I mean, let's see. Okay, so even after this pullback right here, it went on another, pretty good run for 120 days of 32%. So now I have some data that I can use. Now, I don't expect for this Corona run to happen. So I'm probably going more so use a mix of this 32% and this 39% because they're more close, 112 days, 120 days. So for me, I'm going to just be conservative, right? And then I can kind of replicate that data and say, all right, since this is the bottom, I'm going to go roughly about 119 days. And I'm going to give myself, give or take, at minimum 30% because that's what it's done before. And if I do that, that gives me an estimate that by July 6th, Apple should be about 153. Now that's just an assumption, but it's based on historical data that I have collected based on the trends and the moves that I've seen in the past. Then I go into adding, the quantitative and fundamental data to see, does the story back up what I'm seeing technically? And kind of do they gel? And based on what y'all know, I bet most of y'all would agree that Apple to 153 by July is very realistic, if not sooner. You know what I mean? So that's a for sure bet. So it's like knowing that, I'd be cool with saying, yo, let me get a September 150 call with the plan to get out around June. And that'd be my swing trade.
Hope y'all got that, Jim.
Thank you.
Okay. Thank you.
Yep.
Brandon, you up?
Hey, Zay, this is the same method that you use for your QQQ and SPY lately?
I use that same method for every stock, bro. I'm gonna give y'all a real gem tonight, like my secret sauce. All you have to do is start with where did the company open in the beginning of the year. All right. From there, you take that price and you say, all right, based on history, and you can use bar chart. So for Apple, it's 166% over 2 years. Now, again, we need to take Corona into perspective. So I don't think it can replicate 166% over 2 years, but I'll cut it in half and say, all right, what if Apple does 80% over 2 years? So that would put me at the end of 2023, right? Or yeah, by the end of 2023. So where is the end of 2023? Right there. All right. So I put that there to give me historical, some perspective. Once again, this info line is my best friend, y'all. I'll go to January 21, and I can tell on this candle, the price, it opened at 133.52. That's where Apple opened at. Now, if I just take its historical performance of what it's done in the past based on its price today, right, of 133 or when it opened, And again, we're gonna just say 100%. So I probably need to squeeze this a lot because 100% would be crazy. 100%. That essentially will put Apple by the end of 2023 around $263. That's if Apple only does 100% into. Now we have historical data that tells us this is possible because in the previous 2 years it did 166. So again, you can use this, right, to then guide your whole thesis on any company, any ETF. If you say, all right, beginning of the year, I think, XYZ stock is going to do 20%, 25%. You just take your info line, you go to the end of the year, drag it to 25%. That gives you what your price target is. And then from there, you can, and here's the cool shit, right? Here's the dope stuff. This will serve as your trend line. Because all I have to do is go down to the weekly and I can see that Apple is under the trend line. So that's how I know Apple is undervalued. And if you think about it, Apple is undervalued because Apple is pretty much flat on the year. It opened the year at, what did we say? 133.52. So Apple has done 0% growth year to date. So if Apple just goes and does 20% by the end of this year from where it is right now, and if we do 20% by the end of this year, that puts Apple at about 161. And that's if Apple does 20%. Now we know Apple gonna do more than 20%. Like it did $100 billion, in the first quarter alone. So like, I just like to do that to, say, all right, 20% is flatline, right? If I want to be a little bit more aggressive, I can go up to 25. That gives me 168, 170. And then if I say 30%, 30% puts it right at 175. So there goes your price targets and your trend line at the same time.
Okay, so I'm unable to see the chat. So if you have a question, I'm gonna need you to unmute yourself and you can ask your question.
I'll moderate the chat.
Thank you.
Can we use a different platform to see that if we don't have TradingView?
Yeah, I think TOS has an info line. There's other platforms. As long as it has that tool, yeah, you could do it. Y'all had, I think there was a few other agenda questions, but I mean, I'm gonna just say this, y'all. While you got some questions and I got y'all. Don't make technical analysis overcomplicated. This stuff it's with certain things, it's very easy. You can make TA very easy. A lot of people will be like, yo, like how are you able to, kind of do certain, like, because if you learn certain elements, yo, that's all you really need to know. Like this right here, the whole info line, that's a gem. And once you realize that the stock market works on weekly performance, that's why I always pay attention to the weekly charts, because when you watch any analyst talk about the stock market or any stock, they talk about what it's done on a week-to-week basis. Oh, it's up 2% a week. Oh, it's down 3% a week. It's up 10% a week, whatever. That's what they pay attention to, is the weekly movement of a stock. They're not talking about the day-to-day movement where it's up 2%, down 1%, and like, no, they worried about, okay, what is it doing from a week-to-week basis, right? And then ultimately, the next thing is, yo, once you know that percentages are key, y'all, we have the seasonality chart. We have the almanac that gives you percentages. When I tell y'all that this freaking info line is key, because like I can take this, right? And so this month, Apple went down. If I look here at the top, it's negative 8.1% is what Apple did in February. And then in March, it did 0.73%. So it basically stayed flat. If y'all can't see what I'm talking about, I'm looking up here in this area. This will give you all the info I'm talking about. So negative 8.1%. This one was 0.73. So if Apple, now it did 8.88. Remember how I said, if it goes down, it's going to give it to you right back. All right. So from here, now let's just say Apple does in another week 5%. Because Apple doesn't grow, from a week-to-week basis, it's not growing but so fast. So actually I need to go to a weekly. All right. So in 1 week, it went up 8.3%. So let's say Apple gives you another 5% in a week. That means Apple wouldn't go no higher than 139. So you need to, and now that's a lot for Apple. 5% is a lot. Like that's a big move for Apple to go from 133 to 140 because of its market cap. That's a lot of money. So that's not like a small move. And the same thing works for downwards. So like, here's another gem for y'all, right? A lot of people ask me about been asking about this SPY trading strategy that people have been hearing us talk about. So at the end of the day with this, all we're doing is playing the Bollinger Band. Basically all we're doing is just playing the Bollinger Bands and we're buying calls and puts. So like right now, we're in some puts because we at least expected for it to come back into the bands. And then from here, once it comes back in the bands, I'm not gonna front. We're gonna be on a little bit of a run, so I'm not gonna get away and I'm not getting in front of this train. I'm gonna actually go ride the train. So here's something cool. I can say I expect from here going into this week. Let's just say we get like a 1.5% pullback. That will put the SPY right at 405.85. Now, Pete, watch this, y'all. Check this shit out. If I drag this line up right here and I go to the day chart, look at that. There's a gap here. And basically when we opened up the 5th, we opened at 403 and we closed at 406. And so I'm thinking we're going to come back in 405 to test this as to make sure this is support. It will hold because now on a daily time frame, we're closer to our 20-day moving average. So it'll probably come here, this will hold, and then from there we'll probably bounce because the momentum is on the bull side. Now it is possible we could pull back the end of this week to about 400. That's what I would like to see ultimately. And if we did that, again, I could double check my percentages to see, hey, does that match up? If I go to the end of the 16th, right here, and go to 400, that gives me about a 2.8% pullback. That's a buyable 2% pullback. So if the market is ever down and you hear them say, oh, the market's down 2%, that is a buying opportunity, y'all. This week, at any point that they say the market is down 2%, buy it. And here's why. Let me show y'all again the whole thing about using the info line of percentages. And it's all about the trends. Follow the trends, all right? So we got a bottom here. So a candle with a wick, and then we had a top. So just measure from this bottom to about the highest point. I put you at 18 days, 6.8%. All right. So remember that 18 days, 6.8%. If I do this one and go to this top, 11 days, 6.5%. So about 2 weeks, 6.5%. All right. And then if I do this latest one, look at that. 15 days, 7.2%. So all these moves were similar in nature that they all were at least 12 to 14 days and they all went at least 6%. Now, what I can do is find the opposite of, well, what happened after that happened? We had a drop of 10 days of about 3.6%. We had, I'm gonna just count this because you got to, but this was about 3 days of about 5% or 4.5%. Oh, my bad. Then this one happened here. And I would probably mark this there. You got 8 days at about 2.5%. So just for reference, 10 days, 3.2, 8 days, 2.5. Now, watch this. If I go to the 16th, and if I go like to here, 7 days, 2.3%. So it falls within the thesis of what the trend has been doing. It'll go up for 2 weeks, it comes down a week. Go up for 2 weeks, go down a week. So based on that trend, if I want to forecast, all right, so if I think we come back down here, well, what does 2 weeks look like? I grab this, I go 12 days, I run up to 6%. And as you see, it puts me at 425 by the end of the month, May 3rd, basically. And so that's my whole thesis about SPY to 420 by the end of the month. May will probably hit 430. Because I'm just playing the percentages. I'm just following the trend, seeing what it does, and then I kind of replicate it.
That's dope.
Yeah, you're right. Change the game.
Can you show us this on Microsoft?
Nancy, you breaking up?
I ain't heard nothing you said.
Oh, can you show us on Microsoft? I'll put it in the chat.
Oh, no, this is not a session to do charts for everybody. I'm supposed to be teaching, ain't I? Y'all about to be getting free analysis, huh?
I have a question.
Yeah, but y'all can see Microsoft is running. I mean, just on that note alone, look at the. So this is why I always start with a higher time frame, and then I get to your question. But for Microsoft, like these candles are massive. So it's on a technical breakout. So it'll probably come back down. I would love to see it come back down to 245. If it came back to town from 245. So like if you do the same thing, oh shit, there you go. So 6% and 9%. My bad. 14 days, 7%, 9%. So let's just take an average of say 8%. Let's take an average of 8% after a big run. Ugh, I don't think that's gonna happen though. Yeah. So the next time you really want to buy Microsoft will be around 235 if that happened. That's tough. I think it's about to run though. But I mean, 245. Let's see if it got any gaps. I mean, maybe so. Yeah, 238, 237. I guess it would. 7%. Yeah. That's where now I'm gonna tell you like this: Microsoft ain't coming down 7% because it's gonna go on the run. So it's on a new leg. So at most you might get lucky and hit the 245. If it did come to 238, that's definitely a gift. But that's kind of Microsoft. But what was your? I know somebody had a question.
Yeah. Okay. So say you have your long-term plays in, like you have those set up and you're there. But I remember in one of your videos, you were talking about you and your wife are saving up for something and you do shorter term plays. How do you chart for those types of things? You know, assuming you have your long-term plays in place and you are saving up for something, you're like, okay, I want to do this for something. How do you think about the catalyst and like TA for shorter trades? And by short,
okay. So that's a good question, right? And I think the answer to that is really, you can't have a big watch list or like a big list. Like I'm not watching a bunch of different stocks and stuff. Like I'm sticking with the main ones. And so I look at they chart so much, I know when the opportunity comes. And so if it pulls back to my level, then all right, let's just say SMH. And then this is how I would do a leverage play. So if I'm looking at SMH, if SMH comes to 247 or 243, then I can get any time frame. It's just really how much time do I want to give myself, and pick a 260 because I feel very comfortable that from 247 SMH can get to 260, and that's cash. I just have to pick enough time, and then and with that just comes with chain surfing on bar chart. Like I've always tweet that or post that all the time. Like I be just go on bar chart and surf the chains. Like if you see that SMH does come back to 247, go look at June, go look at July, go look at August of 260 strikes and be like, yo, which one is presenting the best deal based on where it was and where I think it could go. That's it.
Say August because you're assuming that you're gonna get out around May.
Right. So you then got to think, you got to take into account how long do you want to be in the trade, right? So let's maybe, so if you want to do it on a smaller time frame, then like right now this is a daily, right? So if we looking at this, you would automatically want to give yourself at least a month within a daily time frame type of trade, because if it gets to say if it gets down here, want to give it at least 2 or 3 weeks for it to get that momentum to kind of ride up, because you can see it takes a little bit of time. But maybe you want to do like a day trade or something. So you want to go to like a 1 hour. And now when you go to a 1 hour, you see how tighter my time frames have gotten, or my ranges. So I would then say, all right, so this is the 8th. I mark a basically a top here. Like if I was evaluating it on a super small time frame. So on the 8th, mark there, that's 255. And then essentially I got support at right around 254. That's such a tight trading range. I wouldn't want to day trade SMH. So when it comes to day trading, you need something that has big movement, like Lam Research, right? Lam Research, if you go look at the 1 day on this, like you get some big movement out of Lam. So like, it does $20-$30 a day. So you could play this up and down within 1 day based on the levels that and set. So if I go down to Lam on a 1 hour, I'd have to go back into time. But once your levels are set, you can kind of come in here and see like, all right, from 528, I could play that up to 560, get out, ride it back down to 555, go back to 595, get out. So for me, I don't really do day trades and stuff except for the SPY. I like swing trades, man, because I feel like the more time you have, it's just a better win percentage. So I really like to stick with like weeklies. If I'm gonna do a swing trade, at least I'm giving myself at least 3 months. So my contracts are at least 6 months to 9 months out. Now I will say by me doing that, if the run up happens faster, my gains aren't as big as if I would have did a shorter term one. So, but I'm cool with that. I'm fine with that. That's, some people want the 600-700%, but they risking more.
Right, they trying to lose their shirt.
Zay, can you double back for those who may not know? When you see gaps on a chart, what does that mean?
Typically, when you see a gap, that just means like buyers or sellers got left behind, depending on which way the gap is going. Because you can always gap down, you can always gap up. But the saying goes, all gaps get filled, right? So if we're looking at Lam Research, you can see there's a gap here, there's gaps here. And really what the gaps mean is there's no technical structure. So like if I go and change this to a line chart, this is why you have like those sharp squigglies, because it's really just forming structure the whole way. It's forming resistance and support, and it's trying to figure out what levels are the right levels. You know what I mean? So when you see like a big explosion like this, typically there's probably some gaps in there, which is why you usually get a retracement. And so if we look at lamb, right, we would assume that 609 to 597 is gonna get like, there's gonna have some structure there, because if we want to go higher, we have to have that kind of fall down bounce to have enough pressure to push us up through that 720. And so as you can see with lamb, that's basically what it's done the whole time. And now there is some time when these runs happen that it don't come back down. So like this stretch right here, you will probably never see this area, like these prices of lamb, you probably won't ever see those again. Like that was just a cool run right here. So then you had a retracement, some retracement, and run. Now, I think these gaps are just too big not to get filled. So that's why we'll have to come down. Plus your 20-day is kind of lagging. But sometimes you can get a run like this, and that's just a leg that doesn't come back.
Okay. One of the questions that was asked was about Powell saying that the economy opened up too quickly and may have a negative effect. Can you share some thoughts on that?
I'm sorry, say that again.
Powell, Brandon, do you want to ask it?
Yeah, Zay, I'm a runner and I'm inside the Slack channel, and you posted an article from Jerome Powell mentioning the economy reopening too quickly and how that could be a time for a pullback.
Just a catalyst.
Okay, and then I also wanted to ask, because I know that you're a big fan, or you do your research on Alibaba, and it seems Jack Ma can't really get a break with the probe from China, I believe. And I just wanted to know, what do you think about the ETF EEM? Because that's the third biggest holding, but it also has TSM and Tencent. So will that possibly be a catalyst to the downside because of Baba?
So with Baba, I think now that they finally got that damn fine out the way, I think Alibaba, you'll start to see a little bit of a turnaround. I think finally that's what a lot of people were waiting on for it to happen. It finally happened. So now I think they'll be able to move on. So yeah, Alibaba is the top, one of the third holdings. Okay. My thoughts on EEM. I love EEM because of Taiwan and Samsung and this company right here. Do not sleep on this company. They are definitely a sleeping giant in China. Damn, they got Val. Didn't know that, but that's a nice pickup. They do nickel for Tesla. You got Baidu, another huge one. JD is another good one. So I really like EEM. It's solid. The reason why I like EEM because you pretty much get all the best companies in China. On top of that, the top holding is TSM, which is a chip company. So for me, I'm just like EEM is like, I like it over KWeb and CWeb personally.
Thank you for that. I would also like to question your math and the madness behind QQQ 500 strike for December 2023, when the strike price formula for a 2-year contract, 10% correction, the strike price says it should be about 395 through, on the higher end, 440.
So sure, I'll show you my math on it real quick. It's a December 23 contract that I'm getting. So essentially I'm looking at it as a 2024 contract. And so if I just take my thesis that the QQQ this year does 22, if I go to my info, what do we open right here? We do, so Dan Ives predicted 25 to 30% for 2022, right? So that puts the QQQ alone at 393 by the end of 21 with 25% growth. If we open up the year at 95 in January and get, say, another 20% in 2022 to 2023, that will put us right at 472. And then if I go one more year, remember, because it's basically a 24, and if I just do 15%, right? If I just do 15% on the low end, of growth for the Nasdaq, which is pretty low. I'm lowballing it. That puts it at 544. So my 500 is well within my target.
Thank you for that, Zay. Thank you.
And I know a lot of people, y'all get caught up on that strike price formula, but I mean, it's the strike price formula is based on percentages. So just know that. So I'm doing the same thing. All my whole thesis is based on percentages. In my 20% year-to-date growth that I'm doing, that accounts for pullbacks and corrections too. Because I'm not out here saying like, oh, it's going to do 100% in a year. These are very conservative estimates that I'm doing.
I just want to say no question is a dumb question. So if you have a question, please feel free while we have Zay on the line to ask it. I know we have varying levels here, so I don't want anybody to feel.
Yeah, we got another good 30 minutes, and I just want people to know, like, all right, so when it comes to TA, I'm really about simplification. So for me, I know people may be like, hearing, MACD and just a whole bunch of stuff. But for real, all that stuff, all that does is just confuse you and make the decision process, the process of making the decisions harder. At the end of the day, you need to find one indicator or two that you just are your go-to and you master them and you know them like the back of your hand. Every other indicator you use should be just, you look at it as, does it confirm the decision I'm already making? That it doesn't necessarily go into, like, even if it doesn't, you just like, okay, it's a risk. It's more of a warning, like a flashing light or something. But at the end of the day, if your main two indicators give you the go, you do it, even if that third one doesn't confirm it, because you master those other two. So for me, what I'm big on, y'all, I'm big on support and resistance. So I kind of showed y'all how I do that. I'm big on price action, open and close. So I'm always looking at, based on my inflection points or where I see the peaks and the valleys, what are those price points that I see multiple like touches at? Because remember, this stuff is computers too. So you'll notice that the computers want to get the prices to certain ranges. So remember, we can't beat a computer. So that's why I do that. The next thing is I'm big on percentages. A lot of my TA is based on percentages. So I follow the trend. I use my info line. That's my best friend. The other part of TA that will really, really help you out is understanding Elliott waves. So if you haven't checked out my YouTube video on Elliott waves, definitely go watch that, because I did a whole breakdown. Or if you've taken my course, I think my guy Brandon said he was a runner, so he might have taken the course. But Elliott waves is something that once you learn that, when you see a run up, you'll know, okay, let me just, this is the third wave, this is a huge run up. And then you also know how to start looking for corrections within, setups. And those waves, like I'm telling you, when you go to the line chart, you can start to see it. Now, a lot of people call that like pattern trading. They'll call this like a head and shoulders and triple bottom and all that. I kind of know some, like I know that stuff, but again, it's just being fancy and all of that. But yeah, I mean, at the end of the day, that's all I use is price action, support resistance, percentages, and yeah. Like I don't make TA overcomplicated. I think that's why a lot of people probably like how I explain stuff is like, I'm mad simple with it. Like most people gonna be like, oh, did this happen? Did MACD say this? And and all that. Like, now I will say this. If you are a day trader, that does matter. So remember, I'm talking from a swing trade, long-term perspective. Day trading, yeah, you got to be on it. You have to be very, very disciplined. You cannot necessarily be as, I would say, loose with your levels. Like I'm willing to give my levels a little bit of wiggle room because I know I have so much time on the back end. Like I'm not necessarily trying to get that lowest of the low. I just want, if I get in my zone, I know I'm good. I know I'm winning because I've identified that once it gets here, regardless, it goes up to a new level. So I'm comfortable with that.
So Zay, you said that your watch list isn't big. So like you have, well, I guess can you expound a little bit about that? Because like, if you're playing ETFs, don't you have to look at the companies within the ETF too, or?
I mean, no, because I'm long term. I mean, yeah, I get. All right, let me give the political correct answer. Yes, you
And
should.
we'll give the
Right,
straight answer.
but like the straight answer is, man, I've been investing so long. I know these ETFs like SLK. The people who run these, they're not gonna put no bullshit in there. So I don't need to do all that extra research. And for what? They did it for me. That's why I picked the ETF. Well, I'm about to give myself a headache. Long as I see they got the best companies and they have a good track record, cool. Now I just need to do my technical analysis and I'm good to go. Same thing with like some of these big tech companies out here. Like, again, I'm all for it. Get to know the management company, get to know all these people, understand the business, especially if you are new. I ain't necessarily new. I've been in business before. So like I can quickly identify business, understand what their product is, who their customer is, what their risks are, and make a decision. But some people, they're new to it. So they need to dig in deep. They need to know all that. But for me, I don't do an overabundance of like research like that. Like I keep it small and tight and stick to quality. And yeah, that's it.
That's how you get to know the personality of like the 5 or 6 or whatever that
Exactly. Like if you look at like right here, like if you this is my kind of my watch list that I have right here, and I'll even share it. So I got the NASDAQ, watch the QQQ, the SPX, the SPY. I watch the DIA, which is basically the Dow Jones, the US 10-year Treasury, the VIX, Bitcoin, Ethereum, Tesla, because it moves a lot, Apple, MicroStrategy, because it moves very, very heavy. And they move based on like Bitcoin. Lamb, as you can see, TTD has big movements. So I like to trade TTD. Nvidia, that's Bay. Everybody know that. Fang, this is an index that I found from watching another dude that I pay attention to who I like his TA. He has pretty good TA, so I like to compare what he sees versus what I see. But he put me on to this, and this tracks Facebook, Alphabet, Apple, Netflix, and Google. So this kind of tell when Fang is running, you know the market gonna run. So this is kind of like a little pretty dope index that I track that gives me a clue of okay, you know, how's the market doing. That's why I feel like it basically, damn, y'all, I'm telling you, this TA stuff is so easy. So y'all see how I have this line here, and that shit's right at the top. Watch what I'm gonna drag this right here, and I'm gonna start from this what's called the neckline, and I'm gonna go to the bottom, which was right here. That's basically how I did it. Y'all see how like perfect that fit is literally on the whole perfect line. This is called proofing. So when you have a correction, if you go from what's called the neckline, which is basically here where the correction started, and you can kind of tell by just looking at the perfect W. And if you go to the low, if you go back to the neckline and you just take that line, that tells you how high the market will go after it bounces. And that's called proofing. So you could do the same thing too, right? So we could have kind of predicted that this is how far the correction was happening based on this move right here. So if this is the neckline for that move, right? I could have do a vertical line, kind of go from about here. Oops, nope, that was the wrong one. Trend line is what I wanted to do. So if I basically go from this top to that bottom, and then go to this neckline, it tells me, okay, your bottom was about right there. And so that's proofing. So like once we had this bounce and we did like this, and this thing started like trading sideways right here, you could have known like once we broke back down and got under this trend line, it was coming towards this 50-day and the correction started, you could have did some proofing and known like, well, damn, we look like it's about to come down to about 4,200. And so now that I know we've hit our top, again, I can go back and I can see like these are some wicks. This was pretty much the top. This is another top. And just based on that alone, I can I automatically know without a doubt it will come down to at least, yeah, about right here. It should at least come because you got a touch here, open here. It kind of came down here, broke through. You had a whole bunch of some fighting up in here, and then when if I zoom in some more, we had the three white soldiers is what this pattern is called, and we busted through this level here, and then as you can see, it tried to pull down, tried to come back, and we go. So ultimately, it's going to come back down to retest, or it should come retest somewhere about. Actually, I could define that right there. That's probably where to come back to. Come back here, bounce, and then we're going back up probably towards 5,000. And again, that's just the reason why I know we're going to come down and go back up is because of the Elliott wave concept. So for real, I'd be mixing the different things I've learned to understand the charts and the trends. Because I know seasonality, I know we are about to go on a run, then I know from an Elliott wave perspective, we're going into the third, which is the third wave, which is usually the largest run of them all, right? So if you go back and watch that video, you'll know that the third wave is the wave that's usually the longest. We'll probably get, and here's the cool part, right? Because it all works in unison when you start to put this stuff together. We get a third leg run, which is usually, pretty big. So that'll last maybe a couple months. So it should last April, May, right? June, quad witching happens. We'll probably get a pullback. And if you know anything about Elliott waves, that'll be wave 4. And then what will happen is over the end of the summer, we'll probably run up going into August, which will complete wave 5. And then September quad witching is when we'll have what's called an ABC correction. I'm not going to go through that tonight because I want y'all to do some homework a little bit, but just go kind of watch that video and see what I'm talking about. And then look from a long-term perspective as far as like a weekly chart, and you can kind of stretch it out and you'll see how we're going to run pretty well through the summer. And then the correction in September, it'll be, September, October timeframe, it could get a little rough.
Hey Zay, when calculating the future estimated price of a stock, when you divide the future market cap by the current market cap, and then you multiply that by the current price, was that for the end of year price for that stock?
It's not necessarily the end of the year. It's whenever the stock can achieve that market cap. So for you, the research would be like, all right, how soon do I think a certain company can get to this market cap, right? So we know that it took Apple so many years to get to a $1 trillion valuation. Then they cut that time in half to get to a $2 trillion valuation. Now, some people are talking about that Apple could be a $3 trillion company by, the end of next year. So if you know that, then you can say, okay, by the end of next year, which is the end of 2022, if Apple has a $3 trillion market cap, you can use that formula that you just said to project the price of what it will be by the end of next year.
198.
Huh?
198.
Yes, sir. $200. Just round up. And again, that kind of aligns with other things you've heard out there that, by end of next, Apple will be 200 again, no time. So now you have a realistic expectation of when it can get there. That's your advantage over everybody else in the market, is you realistically know when it can get there. I see somebody ask, how do we determine the future market cap? You have to just look at what is the current market cap of the company. Look at how much they grow year over year. So you can go look at the history of, okay, when they first IPO'd, this was their market cap. In year 2, this was their market cap. Year 3, this was the market cap. Kind of just look at how their market cap has grown year over year. and use that percentage and project that into the future. So if you notice that year over year, they grow their market cap by 10%, well, you could say, okay, in 2 years, that would be, 10%, and then 10%, that would basically say, oh, you just use that number, and then you can do your math. So then you would take whatever that 10% over 2 years gives you, divided by the current market cap, and then you multiply by the current stock price, and that gives you what the future stock price would be. So I'll put that in the chat. So it's future market cap.
Shannon, are there any other questions in the chat?
I had a quick question about that Elliott wave. Is that after you see the double bottom, Zay, that you're saying that you would look for that?
So you don't always get a double bottom, which is why with Elliott waves, you got to be a little bit careful. But what I will say is that double bottom, all that does is confirm that the bottom is in, and now you're in the start of a new uptrend. So really, from a double bottom, you can really use the Elliott waves to project where you can start a whole new 5 count and correction count from that double bottom.
Okay.
So like if we look at FANG, and if I go to the line chart, you can see corrected here, it had a bottom. Well, actually no. So we correction, bottom. Then this was the retest. So this was the double, this was really the double bottom retest. So from here, this could be, now here's the tough part about Elliott waves, right? Because some people will argue with me, and they might be correct depending on how you look at Elliott waves, because this was the correction and ultimately you came out and this was the retest. Some people would say this was the one wave or the first wave. Then they would say this is the 2 wave where we had the pullback right here. And then ultimately what they will argue is that we have now started the 3rd wave, right? And depending on what time frame we're on, and here's the thing about Elliott waves, it's a constant pattern. So you can spot Elliott waves on a 1 hour chart, on a 2 hour chart, on a weekly chart, because and when you go look at that concept, there's waves within waves, which is why I always tell people when I talk to them about Elliott waves that it is really a like trader's discretion thing as far as where do you start your wave count at and what time frame are you looking at. For me, the easiest way to do it is to start backwards, is to wait for a correction to happen. And I think I even talked about it in my video, is that I like to wait for a correction to happen and work my way backwards. So that way I can just reverse engineer. And then from going forward, I'll start to use the info line in my projections to base where I believe the wave count will happen in the future. Does that help, Jay?
Absolutely. Thank you.
And we have about 15 more minutes left. So if you have a question, let it fly.
Do you use,
Go ahead. I'm sorry.
I'm sorry, Zay. Do you use moving averages for your long-term trades?
I do. So my favorite moving average is the 50-day exponential moving average and the 200-day exponential moving average. And so you can see like here, my green line is my 50 and this is my 200. And that's, I use that for any chart that I'm looking at. So like if I go look at, like, let's look at Bitcoin, because even though on a day chart, like Bitcoin, its 50-day moving average is at 54. Change the candle. It's at what, 54,721. Here's something this is why I say you gotta get used to trading certain time frames and certain indicators, right? Because what I want to tell you guys from a weekly perspective, my 50-day EMA and my 20-day EMA, they have never let me down. At some point, this price is coming to touch this line and this line. It's just a matter of when does it happen, you know? So like right now, like this is why I'm like, yo, okay, Bitcoin is definitely on the run, but the 50-day exponential moving average is at $23,000. So like if it ever had a massive sell-off or something, I wouldn't be surprised because it's so far. If you look at if we use our handy dandy go-to chart or line, which is our info line, and we go from the 50-day exponential moving average to the current price, Bitcoin is currently 151% above its 50-day exponential moving average. So like if Bitcoin lost 50%, guess where that would only bring it? If it goes down only 50%, it only brings it down to about 29. So, you know, you would hear on the news, oh my God, Bitcoin is down 50%. And a lot of people are gonna be losing their shit, right? Because they bought all up here. And so the people who hurt are the people who bought up here. But anybody who bought down here, they know what time it is. They're gonna re-up because they like shit. They were selling up here. So I'm telling you, when Bitcoin has its day, and I'm not a Bitcoin bear at all. I love Bitcoin. I have Bitcoin. But I just know that it's going, it will have its day of reckoning. On top of when you know the Elliott wave concept, you can see that ultimately this was Bitcoin's previous high in 2017 of 20,000. Now, typically when you have a huge breakout like this is like that 3 wave. And typically you will come back down to retest to make sure that this 20,000 is good. So like, I promise you, I would not be surprised if we saw Bitcoin come all the way back down to about 25,000. And from 25,000, it bounces to about 100,000. Because that's how Bitcoin moves. Like a lot of people are saying they think Bitcoin going to get to 100,000. It could happen this year, but it wouldn't be until the end of the year, and it will be after Bitcoin comes back down to at least 30K. Because there's no, I just can't see institutions and knowing how they trade and knowing the history of Bitcoin and it's the drawdowns that Bitcoin has after these massive runs. Like, let's just put some things into perspective. From 20,000, Bitcoin is up 217%. So for Bitcoin to draw down only 50%, that's like, that can happen. It's up 217%, right? So to give back 50% in the grand scheme of things, when you look at it, the run really just amounts to that over, say, a time span. Bitcoin ended up being up 68% over whatever that time span is. And that's still an amazing return for people who not watching it every single day. They wouldn't have even known that it was up 200% at one point in time. But for the people who are more active and pay attention, like, seeing that, that's like, let me go ahead and get my money off the table. I'm not about to suffer through this 50% drawdown. And again, I did a video on those drawdowns and corrections. That puts it into perspective. After a stock has a huge run up like that, like, let's just look at Zoom. While we got time, we still got time. So when you look at Zoom, and Zoom is the perfect example of going on a massive run and ultimately coming back down to where it took off. So when you look at Zoom, that thing, it basically started to run right when it hit about 275. Once it hit here, it exploded. And at the time of looking at Zoom, if you were looking at Zoom, say October of 2020, I mean, just look at how the chart was looking. It was all this green. There was no structure. There is no red. It can't just keep going up, 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 up. So you had to eventually have some selling off so people can come get in at a cheaper price to help push it back up to 700. So like looking at Zoom was the perfect textbook of just slowly dying and coming back and retracing. And if I go to a day chart, you'll see how it filled the gap. So you know how we talk about gaps? Back here, Zoom made a huge gap. This was that earnings when they just went crazy. I think it went from, it went from 320 and that thing went all the way up to like 485. But it had this big old gap and it kind of came down, but it never filled the gap completely. And then it kept running. And, you know, some people would have been like, oh, well, this gap's not going to get filled down here. You know, Zoom's just going to keep running because at that point in time, it ran all the way up to about $600. But once that happened, look what happened. It just started slowly dying, coming back down. And then eventually, look what happened. That gap got filled. This is where the gap was, right here. And right around here, it got filled. All these prices up in here was filling that gap. Once it started hitting this blue line, the gap was getting filled. Now, these were all the people who buying. So all these people who bought here, these are the same people that bought here. And watch what happens. Zoom will go on a similar run. And now Zoom can basically resume its run back up to $600, $700 in the future. That's not to say it's going to happen this year, but you know, Zoom has a bright future, especially if they're acquired or something like that. Like, I can definitely see Zoom working its way back up, but it's going to take some time because it went on a massive run. So Zoom will take its time. 457 is likely a good price point at the top of the bands. And ultimately, you would want to see Zoom get above 457 if it has any shot of going back to its all-time highs of $600.
Questions?
I have a quick question. Well, two things. For the first thing is I wanted to know, Zay, do you use stop losses at all?
I do.
Do you free ball them, or do you use something like the ATR or something to prevent yourself from getting like stopped out?
So great question, right? So with stop losses, that should be in your trading plan. Before you enter any position, you should say, I'm going into this trade. I'm putting up this amount of capital, and at max, I'm willing to lose. You know, I'm willing to be down whatever your percentage is. So again, I would say, Jay, it depends on, like, is it a leap? You know, is it a short-term trade or is it a swing trade, right? Because if it's a leap, I might not necessarily put a stop loss on a leap because I got so much time. Like, I might put the stop loss on a leap once I'm up 200, 300% because I don't want to lose that. And, you know, if the market ever dips, I want to be able to take those gains. Now, let's say it's a shorter time trade, then, you know, you might want to have a tighter stop loss where you're like, hey, if I'm down 20%, go ahead and get me out. So as far as stop loss.
But you don't use like ATR or anything. You don't use anything to calculate it. You just go ahead and, like, we do set like your goal.
I do it based. Go ahead, I'm sorry.
Yeah, you set your goal and then you kind of do stretch goals if things are still running.
So I do my stop loss based on the capital I put in.
Okay, percentage loss. Okay.
Yeah, like I do it based on the amount of money that I put into the trade, not based on the price of the stock or whatever, because options move different. You know what I mean? So we've seen it. The price of a stock can go up, but the option go down. So I do mine based on the capital I have in the trade, where it's like, at, you know, this trade, if I put up, say, $1,000 for a trade and, you know, I'm only willing to risk 800, then I'm putting a stop loss, you know, whatever that percentage equals out to, where it gets me to 800. And this is the thing I like about E-Trade. It does, you know, you can figure that out using the Power E-Trade tool, where you can put your stop loss. You can create what's called an exit plan, and you can put your stop loss in based on the percentage of your entry. And so if it ever gets to a certain number, it'll automatically sell for you.
What is that thing called on Power E-Trade?
It's called an exit plan.
Oh, okay.
So you got to use Power E-Trade.
Okay. And then I think somebody had a question about the Fibonacci. I think that was earlier prior to us starting, somebody had a question about Fibonacci.
Sure. What's specific about it?
Ooh, that
I
Yeah,
was
he
one.
just
just
did a video, right?
Yeah, that's why I'm like,
Yeah,
what?
he just did a video on that one.
But you know, I don't mind going over it, but just like what specifically about Fibonacci? Because again, like, you know, people ask questions, but they're like very broad. It's, you know, people use these things in so many different ways, y'all. There's not just one way to do technical analysis.
What's the advantage of using Fibonacci versus the other things? Because like the Elliott waves and like the info percentage lines, like that seems super simple. And then to add Fibonacci on top of that, what is the advantage over one or the other?
It's really not an advantage. It's just what, you know, different traders use different things. So I use Fibonacci, but again, I use Fibonacci as a way to confirm the analysis that I've already done. Whereas somebody may do the Fibonacci first and do what I do to see if it confirms what the Fibonacci sees. So, you know, again, like I said, you're right. Fibonacci, all that stuff, I'm gonna be real with you. All that stuff, all they do is make technical analysis more complicated. You guys now have seen what I do, and you're like, wait a minute, that's so simple. And now it probably has you questioning some of that shit that y'all done, you know, done heard them and taught about. It's just like, I don't need none of that if I can just do this. But again, you know, yeah, it took me a while to just be like, you know what, I don't need all that stuff, because at the end of the day, I have found a far more effective way to conduct TA that for me, I can include economic news and stuff like that that really validates mine versus just being solely a technical trader. Which again, Fibonacci and all that stuff is really good for people who are technical traders and are like day traders. So like if you're trading Forex or futures or something like that, Fibonacci is great for that stuff. The stock market, because we have so many variables that can affect the prices and movement, like some of that stuff is good, but the Fibonacci don't account for when Joe Biden come out and say, yo, I'm about to do $100 billion to chips. That's going to blow your Fibonacci out the water, because, you know, money is like, oh, I'm running to that. That, you know, Fibonacci can't account for that kind of stuff.
That's good.
Any last questions? We got like 6 minutes left.
Zay, I think some people in the chat, they have some questions about your courses, like, yeah, like kind of what they are and what price wise and stuff.
So the trademark course is definitely my how to read charts for new investors. So I mean, for real, y'all just basically got well, the course has a lot more stuff. So I definitely go through Heiken Ashi candles. I go more in depth as far as gaps and gap fills, Fibonacci, Elliott waves, how to read the candles, the candlestick patterns. Like it's a lot more in depth, more in focus, more explanations, more walkthroughs. So just how I walked you guys through that, I think for the people who have taken my courses, that's probably like the one advantage a lot of them say is that I'm very big on practical application, visualization. Most adults are visual learners and need to see how to apply what you're teaching. And so I'll like give a slide where I talk about it, but then it's like, well, let's actually apply it to a chart and show you how to do it. On top of that, I'm like, get your chart out and follow along so you can see how it's done. Like I said, the bread and butter is usually the how to read charts for new investors. After that, I do have a private community Slack group and bi-monthly Zoom calls, as well as every Friday we do a live trading room where we trade the SPY together. So we basically strategize, we talk about it, you know, what we're seeing. And then, you know, some of us who like to day trade will take a day trade. Some who don't have the appetite would, you know, we do a 2-week trade or monthly, just basically strategizing on like, okay, what should we be doing, you know, for the SPY. Most of the people who do SPY trading do 2-week to a month trades because they're swing traders. Most of them people, you know, still working, so they don't got time to really watch it like that. So That's that. What else? My other two courses, I don't think any of you guys will probably need it, but I'll just put it out there just in case, which is just options for new investors. So for somebody who's like completely new and has like doesn't even know how to buy or sell, like this is the course for them, because I'll break down like the Greeks and what options are, strategies on how to do research, technical analysis. It's like an all-encompassing course. And then the final course I had is actually early on. I had people say, well, hey, look, I don't really want to do options. I just want to long-term invest. And for that, it's just all about fundamental investing. So, you know, how to dollar cost average, again, how to do research, what's the best way to build wealth through owning shares. How can I actually did a formula on how you can figure out how much money you need to retire early, because before options and stuff, like I was on a fire journey. So if anybody's familiar with like financially independent retire early community, like I was, you know, I'm still active in that. So you know, I was on some like, all right, I'm gonna just put as much money in the market, buy the best companies, and they gonna get me free. But then come adding on options, it's just like, oh, that just helped accelerate my fire plan, really. Like I'm still on a fire plan. It's just that options help accelerate it. So now I'm going from being able to walk away, retire 10, 15 years to now 3 years. So yeah.
Dope. Well, Zay, thank you for your time. Thank your family for allowing you to come spend some time with us. So, yeah.
Cool, y'all. I appreciate y'all. Hopefully this was good stuff. Hopefully I answered
Definitely.
any questions. And hopefully at the end of it, I just showed you guys how to make TA simple. Because I know you guys hear a lot about using different indicators and, you know, how big technical analysis is, but for real, y'all, it's really not. It could be all so simple if you just sit back and just be patient. Hopefully I gave you guys some keys and some gems on how to do that. But yeah, definitely, you know, just do a little bit, you know, further studying. But again, it don't have to be rocket science like, you know, people make it out to be. It could be really simple. And again, the info line will be your best friend.
Yeah, I'm gonna go practice that for sure. I ain't know about that one, so I'm gonna add that to my repertoire.
Yeah, that's my secret weapon, yo. So
Cool. Well, everybody have a good night. Enjoy your Sunday, and go get the money.
all right, y'all.
All right.
Thank you guys so much.
All right, guys.
No worries.
Thank y'all.
You.